The great thing about earnings season is that we get to hear from a lot of companies that are really important to the economy. Particularly this week, we just had several companies, including 3M, UPS, and many more, basically tell us that things aren't as good as people thought, if you really read into the headlines. And particularly for company 3M, which is ticker symbol MMM, 3Ms, that news wasn't very well received and the stock has taken a big beating. Now, I want to go and look at the charts and just kind of reiterate something I've been telling our clients for some time, and then we'll look at the market rover so you can see that we're now getting some sell signals in this part of the market, in the industrial parts of the market. But it's all really important to understand that these sort of topping cycles in economic growth, they take time. Those are not, they're not points, they're processes. So let's have a look at particularly the chart of 3M so you can kind of see what this looks like. This is the long-term chart of 3M, and you can see a very well-defined trend to the upside. Of course, we had a big fake out breakout take place. Then we mean reverted back to lower end, and now we found resistance right at the upper end of that trend. That's probably not such a coincidental move, and you can see a very, very big down move so far. If you look at if you look at industrial stocks as a group, you don't see this as much yet, but what you do see is that we have moved essentially to the upper end of the range. Essentially, the industrial stocks, this ETF, which is the XLI, has essentially traded between, let's call it 80 and 71 or so for the most part here, except for the big shank, if you will, to the downside, and then we meet it back lower. So I think there's a very limited upside here. Now, if we go into the market rover and we look at what the market rover is telling us, I'm going to first click on industrial stocks, which is right here. So I'm going to click on this, and what that just did is it filtered all the industrial stocks into down here, and also the chart, and you can see how beautiful the signals have been here. We had buy signals here, buy signal that resulted in a nice rally as well, but we're now getting some sell signals. And I'm now going to just flip through and find some sell signals. You can see we're getting sell signals in companies like American Airlines. You can see this latest sell signal here. We had one there as well. We're getting sell signals in CSX now as well, which is a transportation stock. We're getting it Eaton. We're getting it in, anyway, you can see all these here. And this is all based on what's happening at a sector and group level. So you can see, for example, Eaton here, a sell signal right now. And so this actually brings up another point, which is one of the main differences between professional investors and retail investors, that is that the professionals look at the market through the lens of industry and sector rotation, which is something I'll talk about in a video next week. But for right now, just know that industrial stocks are once again coming under pressure. We are starting to see, again, these companies realizing that growth is slowing, not falling off a cliff necessarily, even though some of these stocks are looking pretty bad. But for the most part, growth is slowing, which is probably meaning that at least on the upside, stocks are somewhat capped in general. And I think selling the rally, particularly on steep rallies, is probably the thing to do here. Hope this helps. I'll talk to you soon.